everyone, my name is Namhle and welcome to our Financial Markets Literacy channel. Today we're going to be covering fundamental analysis and we'll touch on sentiment analysis as well. So if you're joining us for the first time, please like, comment and subscribe. And for those guys that are coming back, thank you so much for coming back, and hopefully you'll find this video very useful. So without wasting any time, let's just get into it. So today we're going to be looking into 3 economic indicators that are affecting the Forex market. And the first one is interest rates, and second is inflation, and the third one is GDP. But before we just dive right into it, let's define what fundamental analysis is once again. So fundamental analysis is a way of looking at the Forex market by analyzing economic, social, and political forces that may affect currency prices. So the first one, like I have said, that we'll be looking into is interest rates. So when you're looking into trading, obviously there are always news events that are coming out that do affect the market. And today we're just going to be looking at the 3 major news events that you can take into consideration, especially when you're looking into analyzing and getting into the market for those great volatility and those spikes that you might be looking into, be that you're scalping the markets or whatever form of trading or trader you are. Okay, so with interest rates, so interest rates is basically the price you pay to borrow money. All right, so the central banks creates money, and that money is then borrowed to private banks, and then the percentage of principal that the private banks pays for borrowing currencies is called the base currency. So what happens to Forex when the Fed raises interest rates? When the Fed, for example, in the America, raises the interest rates, it makes the US dollar more attractive to investors. So you'd find that each and every single time the rates are raised in any economy, as a matter of fact, but we'll make an example of the US, is that you'll find the price of the dollar will strengthen because it's making it more and more attractive to investors. And obviously that is increasing the demand of the dollar, allowing it to go on an upward trend for quite a period of time after obviously those news events have been released. So you would tend to see, if the news are that the interest rate has been increased, you'll see that there would be a spike in your candlesticks after those news events have been released. If, however, the opposite happens and the interest rate decreases, you'll see that there will also be a high demand for supply, meaning that the price of the dollar will tend to decrease if the Fed announces that the interest rates have decreased. Okay, so that's the first one. And then the second one is called inflation. Inflation is an increase in the general price level of goods and services in an economy. And how does inflation affect the Forex market? When inflation is high, the value of a currency weakens. So if, for example, again, the dollar, if the inflation results are launched or they are released, you'll find that there tends to be a drop in the price of the dollar. Obviously, this is making it less attractive to investors. Hence, you will see that drop in the dollar. And obviously, once the opposite happens and the inflation is basically decreased, you'll see that it becomes more attractive to investor, and it will have an inverse performance, causing the price of the dollar to also increase, or any other economy. As a matter of fact, it could be the pound, it could be the euro, the Japanese yen, or any other currency that whose results you are looking into. And then the last one is the GDP, which is the gross domestic product. So what is the gross domestic product? The GDP is the measurement of all goods and services produced within an economy within a given period. And how does the GDP result affect the Forex market. So an increase in the GDP is likely to have a positive effect on the currency. So an increase, or if the news results come out that there has been an increase in the GDP, obviously this shows that the economy is healthy and it's increasing and it is growing. So it would tend to have a positive impact towards that currency pair. Again, we'll make an example of the dollar. Once they release their GDP results and we can see that it is higher than expectation, or it is higher than the previous results that had been released, you'll tend to see the price of the dollar on those candlesticks, they will tend to spike on an upward trend. However, if those results are not positive and they are negative, meaning that the gross domestic product has decreased, it shows obviously an unhealthy economy, causing the price of that currency to drop. If the currency this is the nice thing about the Forex market, is that even though the currency is dropping, you can still trade it, meaning you can sell and still be profitable. But obviously we're just defining what these terms mean when it comes to the news results that are coming out on a fundamental analysis basis. And then we have sentiment analysis. So sentiment analysis is obviously how the traders feel. It's looking at people's emotions and feelings towards the market. And when you're looking into sentiment analysis, you also need to take into consideration, depending obviously where you're getting your news, that between 70 and 80% of retail traders tend to lose on their trades. So you'll take that into consideration when you're looking into sentiment analysis, so that obviously whenever you're looking at the news results, you can put that in play as well, rather than having to go in blindly. Like I had said before, when you're looking into analyzing the market, it is a three-legged stool where you're looking not only at technical and fundamental, but you also incorporate a bit of sentiment analysis as well. So that is it for today. Thank you so much for joining me. Please don't forget to like, comment, and subscribe. Share as well with your world and people that you think will find this video useful, especially to people that are new to trading and have no clue or whatsoever, but would love to know more. And even those ones basically that have been trading for quite some time, but would love to create a community of other people where they can engage and chat about all things financial markets. Please do engage with me and I'll be more than happy to give you guys feedback. I will leave a link at the bottom so that you can do more analysis when it comes to fundamental, because we've only covered 3 for today. There's obviously a whole lot more, such as your CPIs and as well as your employment rate that you can look into, but I'll give that for you guys to have a look into. And also make sure to download your economic calendars and check them out. For example, with your broker, you can see that. I'll leave an example at the bottom on where you can monitor all these news events that are coming out. There's certain dates when they're coming out. You can check them on the economic calendar and then start planning your trades according to that, and make sure that you don't go into the markets blindly. So what we'll be doing next week is we'll be covering platforms, which is probably a lot of information for some people who might not know how to trade, but it's going to be a whole lot of fun. We'll break it down, make it very simple so that you can know exactly how you can download your platform, especially when it comes to your demo account, how to look at your servers, and so on and so forth, and as well as the different types of platforms that are available for you, because there's not only one platform that's available, but there's a plethora of those. So yeah, that's it from my side. Thank you so much for joining me. Take care and be blessed, and hopefully I'll see you again next week. Bye.